Hello, this is Forex CMC Trading. On today's episode, I'll be teaching the concept of inducement, right? Now, there are so many losses that people incur, not because the market just want to stop them out, but because they don't really understand the concept of inducement. So in this video, I'll be teaching this concept, and please pay attention, right? Now, the first question that comes to mind is, what is inducement? Inducement is simply a trick, right, or something that happened in the marketplace that trick traders to take either a buy or a sell position with the intent, right, of taking them out, right? Let's say, for instance, you have a market structure like this, right? You have a market structure like this, and right, then traders will say, oh wow, let me trade from here, right? Let's say there's another block here, and traders want to trade from this other block here, and you find out at the end of the day, price does this, takes them out and continue buying, right? And you see traders saying something like, oh, the market just stopped me out, and all those traders talk, right? But if this trader understood the concept of inducement, knowing that this is an inducement level, he or she will be able to overcome this loss, right? Now, having said that, please, if you're not subscribed to this channel, kindly subscribe and turn on the post notification bell, because I will bring you a super episode on what makes your trade high probability, right? Now, having said this, let's see some conditions. What are the conditions for inducement? What makes inducement? What are the conditions, right? Personally, I don't look for inducement all the time, right? There are some conditions that make inducement become something you look out for in the market, right? And I think let me digress a bit. One of the mindset behind this, or the mindset behind this, is that when there is a trend like this, right, we want smart money to be involved in this trend, right? So what happens is that smart money will look at where there is obvious liquidity level, then they will want price to tag that liquidity level, force these buyers here to sell, so that they will hand over their buy position to them, whereas the smart money buy from this particular level. So you see, people that bought here were not wrong. It's not that they were wrong, they were not, but it's just that they didn't have the understanding of inducement, right? And inducement is what helps smart money to enter a trade, right? So I said, what are the conditions for inducement? What are the things you look out for to say, okay, I will be expecting inducement in price, right? So let's see this. There are two basic conditions for inducement. Okay, the first condition for inducement is the presence of an IPA, right? The concept of the presence of an IPA, that is imbalance price action. Now, let me demonstrate this right here. Now, imbalance simply a point in price where there is one kind of orders in the market, right? Point in price when there is one kind of orders in the market. Let's say you have 3 candlesticks like this, right? You have 3 candlesticks like this. Please pay attention, and this will really help you a great deal. I'll just do a quick walk here. I will look at subsequent times, I will look at imbalance fully. Now, you agree with me that between this place and this place, right, it was a buy order. Why? Because when people bought here, sellers brought this price down here, right? Sellers brought this price down a bit, then bought. Now, at this point in time, it was just buyers in this particular point, at this particular point in time. So that is the first condition of an inducement. Then the second condition is the presence of liquidity, right? Maybe equal highs, right? Equal highs like this, that is liquidity, or equal lows, right? That is liquidity. right? Or it could be a trend line liquidity and stuff, so on and so forth. So I will look at, subsequent videos. I will also teach you the concept of liquidity, right? But let's just get this. So we have two conditions for inducement. I said the first condition is liquidity, right? Presence of liquidity. While the second condition is imbalance, right? So let's go to the chart and let's see how this goes, guys. So let's go to the chart. Okay, cool. See this now. Let's see this, right? This concept is so powerful. It's a very great concept that when you understand it, there are some losses you will not just take. Now if you see this point here, okay, let's just identify the market structure first. All right, the market structure first. If you look at this, high, low, high, here was a break of structure, high and low. Now if someone sees this, if a person that does not understand the concept of inducement, the person will seek to to sell from here. We just say, well, this is another block. The person is not wrong, it's just that the person does not understand the concept of inducement. Now if you look very carefully, you find out that there was an imbalance here, right? There was an imbalance. If you check these three candles, you see there was an imbalance here. So once there's an imbalance here, it now makes this high. It now makes this high an inducement, right? It makes this high an inducement. That simply means that we will expect price to come in here, raise this high, come up to this imbalance, then maybe to this other block, then we'll expect price to come down. So let's try to frame this setup right away. Now where am I targeting? We will see that there's liquidity here, so this should be a possible target for me, right? Should be a possible target. Then let's see, there is also liquidity at this level here. This could also be another target, right? It's liquidity here, so just pay attention. Okay, now so here becomes liquidity, right? There is liquidity. So instead we'll look at this our POI. This will now become our POI, point of interest, right? So we expect price to raise this high. Okay, so let's see. Then please take note that our stop loss will be above this high, right? Then I will target this low as our first take profit. So let's see how this plays out. Okay, let me just increase it a bit. Let me increase it. You see, they will enter that cell and say, wow. You see, did you see what happened here, right? People that enter this cell, assume you enter this cell, say, wow, I'm correct. My analysis is correct. Now let's see what price. Price came back again. Create another high here, and they will say, wow, I'm correct. Now let's see what price did. The shock of their life, right? They received the shock of their life, and boom, price starts selling. Right, you see price starts selling. Let's see, price starts selling. Okay, let's see if our first take profit to be hit. Allow this to play around. That's why you need to have patience, right? So you need to have patience. Okay, it's close to our first take profit, and let's see. Let's see. That's why you have to be patient. You have to be very, very patient. Wow. Price lead down around. So you see this now, right? Let me zoom in. So first say profit hit. You see how price danced around, and all that. So that is it. Now let's see. I will give you another example right away. Right? This was the condition of an imbalance, being the result for an inducement happening. Now let's see the point where there is liquidity, right? Liquidity being the factor that caused the imbalance. Okay, if you look at this very well, we know that there is already a change of character here, right? That means that it could be a signal that the sale is about to end. So now let's see. Someone may say, well, I can't see any inducement here. Yes, there's an inducement here, right? This inducement, it's the inducement caused by liquidity, right? If you check this very well, you see there's an equal load there, right? Check it very well. There's an equal load. Let me zoom out so that you see it clearly. So there's an equal load there, right? So we expect price to read this and start buying, right? We expect price to read this and start buying. Now the question is, where are we looking? Where is our target likely to be? Where is our target likely to be, right? Where is our target likely to be? So we target this high. Target this high, okay, but ideally the first place to target is this high, right? The immediate high. Then subsequent targets can target these other highs like that. So let's see how this plays out, guys. Let's see how this plays out. We'll place our buy position a little below this low, right? Then we'll target that high. We target this high, guys. So let's see how price will read this low. Remember, this is liquidity. This is liquidity inducement, right? So let's see. So price tag that, right? And you see the impulse move. This tells you that smart money is behind this move. You see that now, guys. So I hope this was insightful. Please don't forget to subscribe to this channel. See you in my next video. Cheers and God bless you.